Welcome to AM Best Audio.
Surety insurance plays a vital role in guaranteeing contract and commercial obligations and building trust across industries. Here to discuss some of the key trends, challenges, and innovations shaping the surety landscape today is James Crinnion, Vice President, Commercial Surety at Philadelphia Insurance Companies. James, so glad you could join us today.
Thanks for having me. I appreciate it.
So James, what are some of the biggest challenges facing the commercial surety industry right now?
You know, I kind of had my pick, but I think the things that come top of mind right now are employment and lack thereof, really. We don't have enough qualified underwriters in the surety industry, either on the underwriting side or even on the agency side. Just every company, it seems like, is looking for more underwriters in every part of the country. Underwriters are getting calls from multiple areas, from multiple companies. They might not take the job, but they get a sense of what their worth is. They might hold out for something better. But overall, over the last 10 years, even plus, there just haven't been enough trainees being brought into the industry so that we have enough underwriters to go around.
The overall surety segment continues to experience solid growth, James, but just how much is it growing?
Oh, tremendous. From the 5 years between 2016 and 2020, it hovered, I think, around from 5.8 billion to about 6.9 billion. So it grew a little over $1 billion in overall premium in 5 years. Nice steady growth. 2020 to 2025, completely different story. Jumped from 6.9, and we just the SFA just released the results for 24, and they came in at 10.7. So just exponential growth over the last 5 years. Really, it's 3 to 4 things are driving it. One, you can't ignore the inflation factor. Quite simply, contracts are more expensive. What used to be a $10 million project, it's now $12 to $15 million. So that's absolutely driving the growth in premiums. The bonds are just bigger on the contract side. A lot of new bond products out there, especially SBLC, surety-backed letters of credit, mainly used on the commercial side. Those don't come in small packages, and they're driving a lot of premium. Newer industries too, renewables, solar companies, wind. They are requiring a lot more bonding nowadays. And really the last thing on the commercial surety side we've seen is where a program, say if somebody's a money transmitter, so they're responsible for moving money around, they need bonds in all 50 states. That program used to be 7 to 10 million for that company worth of bonds and to be bonded in all 50 states. Nowadays, that could be $20-30 million worth of bonds for that one company needing, for those 50 bonds in all those states. So it's really grown. And I think a lot of the legislators are looking around going, we require people to have this bond. Is it large enough to cover the risk that we intended it to? And a lot of times now that answer is no. And so they're going back to the drawing board and increasing the bond values.
What emerging risks or industries are increasingly seeking commercial surety bonds?
Really, I got to go back to the renewable space. That seems to be driving it more than any other, especially in the commercial surety side. So you're talking about solar farm developers, and these are large, commercial scale developers, large wind developers. They need land procurement bonds. They need soil erosion. They need power purchase agreement. They need panel purchase agreements. And these bonds could be, several $10 million, $100 million in size. So these are large projects that 5-10 years ago really weren't on the horizon, weren't being bonded. And it's really the new emerging market right now, especially on the commercial surety side.
So, James, what recent market trends or shifts have you observed in the commercial surety sector?
In the last 5 years has really been an explosion in these surety-backed letters of credit. And essentially what that is the obligee doesn't want to take a surety bond. They'd rather take a letter of credit. So that's always been kind of a push and pull between the surety industry and the banking industry, which product, has pros and cons, which one pays quicker, which one's more protective for the principal. But what we're finding now is kind of a blend, whereby we put up the bond, it backs a letter of credit for our principal. Our principal doesn't have to put up cash to back that letter of credit, and it frees it up for their development or something else they can do with it. So there's an arbitrage play there, and they like the product. One of the banks who was an early adapter of this product, working with the surety industry in 2020, they just announced recently that they have crested the $4 billion mark of these obligations. So it's growing quite rapidly, and clearly it's contributing to the increased premium in our industry.
Okay, James, got to ask, what are the benefits of working with Philly?
Well, it starts with the paper, right? A++ paper, financial strength. These are tough times. I think our company does better than most in managing some of the cat exposure that's out there, making sure that, number one, we got to make sure we're here tomorrow for you. And then it really goes to the services. We're a full service commercial surety operation. We're able to do reverse flow from international clients. We're licensed in all 50 states. We have underwriters that can underwrite up to $300-400 million large obligations. We also have a transactional unit, so that has a point of sale system for people can go online and buy that simple bond they need to keep their industry or keep their work going. And last, it really ends with the people. This is a relationship business. At the end of the day, all we're selling is a piece of paper, and so there has to be a trust value there, and an understanding that we can get the job done for that agent.
Well said. James, thank you so much for taking the time to speak with us today.
Hey, thank you. I really appreciate it. Anytime.
That was James Crinnion, Vice President, Commercial Surety at Philadelphia Insurance Companies. And I'm John Weber for Best Review Magazine.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.